Hey everyone, welcome to another episode of the Everyday Trader. This is Greg Jensen, CEO of Options Animal. Good to be with you today on October something, somewhere in the middle of
1010. How could
October.
you not know? It's
It's
Tesla Robotaxi Day.
it's
You know
Robo Day on Tesla. Eric, how are you?
Robotaxi Day on Tesla.
I
Yeah.
just I just thought it was the day that the Yankees are going to try to move to the next round. They got Garrett Cole throwing tonight. I'm all about the Yankees this year. I'm not about the Yankees. I want the Dodgers to win, but I think the Yankees are the team to beat. But anyway, we're not going to talk about baseball. We're going to talk
Mets,
about
Mets.
Tesla.
So the Mets, whoever, so it's either San Diego or your LA playing the
Dude,
Mets.
the Mets are playing really good baseball right now.
Yeah,
We
they
could
are.
maybe we see a Subway Series again.
Do you know the two
Mets
times they've
Yankees.
won the World Series? You know what's happened to the market?
1986
Then the crash in 87.
and the crash in 87. When was the other time they won the World Series? I don't
There have
remember
been
that.
two market crashes. Every time the Mets win, there's a market crash.
87 and 2007. Did the Mets win in 2000?
These are things that are correlated but not causational. Folks, it's important that you understand the difference between causation and correlation. My favorite example is the number of pool drownings and the release of Nick Cage movies. And there's like 100% correlation. Nick Cage, does three movies in 1 year, and three times as many people die that year from swimming pool accidents. So check it out. There's bad uses of causation and correlation. There's some awful ones out there. So professional sports does not affect the stock market. But
Okay, best Nicolas Cage movie of all time. Is it what's the one where he's like, is it called Demolition Man? No, that's Sylvester Stallone.
I love Raising Arizona.
I like Raising Arizona too, but the one where he's like a criminal and he's going on an airplane
Oh
somewhere.
yeah, Con Air.
Con Air. That's what a horrible movie.
My son went to university. He didn't go to he ended up doing a campus tour. I remember at a Big Ten university, and they were talking about all the activities they had, including the Nick Cage Film Appreciation Society. That's all they do is watch Nick Cage movies.
There you go.
Nicholas, hey, I don't know if you knew this. I actually saw Nicolas Cage when he was filming that movie. It's like Mr. Something's Mandolin, some Italian name Mandolin. I
Okay.
was I was in Venice on business, and I was standing at the bar, and we were there as a group, but the place, it was really weird. Wasn't a lot of people there, and I think they shut it down because the film crew was there. I didn't realize it, but somebody goes, "Hey, Eric, um, look over your left shoulder. There's Nick Cage." And they go, "No, your left shoulder." And I look over, and he's first of all, he's short, and he's got like these little hair plug things, and he's wearing all leather, and he's literally 4 feet from me at the bar. I stand and look at him, and he's got some big muscle bouncer guys, and he's drinking wine, and he's talking with an Italian accent. So he's in character for his movie, and he's speaking with this awful Italian accent. It's just terrible. And he's drinking wine and he's chugging it. And I didn't, but turns out the guy that told me that knows that Nicolas Cage is a huge comic book collector, and this guy's also a huge comic book collector. And they hit up a conversation, started talking about comic books.
There you
So
go.
that's my brush with greatness. Nicolas
Your
Cage.
random stat of the day. There we go. Love it.
Yeah,
Love
Venice,
it.
Italy, Venice,
The
Italy.
Mets and Nicolas Cage. There
Well,
we
let's
go.
take
We
this back
started
to
today's episode.
talking about what our people, listeners want to hear, and that's making money on Tesla options. Before we go, yeah, let's talk about that. You mentioned I forwarded an email from Matt Levine that came out this week. That was uh, what's that German word when you enjoy seeing other people have trauma? What's is it Schadenfreude? You know that
Something
word?
like that. Some ugly word, right?
Yeah, it's and I certainly don't gain pleasure in other people's um tragic tragedy, but there's a story. Matt Levine, by the way, he's a little bit nerdy. Matt, don't take this the wrong way. So uh Matt writes for Bloomberg, and I don't know where he comes up with this stuff, but some of his articles are literally laugh out loud funny. I was reading to you earlier. He wrote an article about a day trader who's a volleyball coordinator trading 0-day options, and that was a pretty funny. He talks about that that person is the muse to Susquehanna. So, anyways, that was a different story. This one is about a guy, a Canadian guy, who started off with $64,000 US, 88,000 Canadian, and turned it into $306 million trading call options on Tesla.
Unbelievable. I mean, this story made me sick to my stomach when I read it, actually. I mean, it's just unbelievable. Number one, that you can have the capacity to let that bullish move run from, 60 some US $1,000 to 300 million in a couple of years on doing nothing but doing call options on Tesla. That's an amazing streak of really brazen risk tolerance. The sad part is, that he ended up losing it all.
Yeah. And so he hired a team to help advise him. And now he's suing the team because he lost all the money. And so this is the thing that's, you hear these stories and say, if it was me in that situation, I would be different. And I think if you don't follow some sort of a process or, have goals and defined exits, you were commiserating, or I don't know what you were complaining, not commiserating, but you were talking about a trade that you did on Palantir, and I'd punch you in the arm if I was in the same room because you made money, and you're thinking, oh, I could have made more money. I wish I did something different. Hey, you made money, so take the win. And when you place the trade, and I know here's the thing about you is I know you didn't screw the trade up. What a lot of people would do is, oh, I could have made more, so I'm gonna do something different. The fact is that call options are priced at a level that you should not make money on call options. It's it's the bad bet at the casino table. It's good to be selling options now, managing your risk. That's why we love the covered call so much. And it's boring. You're not going to turn 64,000 into $300 million if you're on the other side of the table. But things have to go right, and during that time frame, certainly Tesla had a 17. I think it increased it by 1,700% or something. There from the peak to the trough, and he just happened to be in it at the right time. And to be honest with you, call buyers can actually drive markets. They can force market makers. Short-term call options. We've had Lex Lutheringhausen, the former market maker, explains how this works. Is if a market maker sells calls, they buy stock. So if somebody's buying millions of dollars or tens or hundreds of millions of dollars of long calls, there's more than that in the stock being purchased. So there is this impact that happens that drives the market higher. And so you buying calls is going to make a market maker, because of what we call this gamma, dealer gamma, will make dealers, and that can drive stocks higher. So,
yeah, I mean, you're right. And going back to the whole idea of risk management and trading, I mean, I'm going to make 5% on this trade, 5.43%
and
on this
when,
trade
how long?
in 21 days. I mean, again,
That's awesome. That's incredible. That's over 60% annualized,
it's
right?
over 60% annualized return. And that's the beauty of, you can be safe and conservative, boring type of trader. And as long as you're disciplined and you stick with it and you stick to your guns of your methodology of trading, yeah, you can make some outsized, phenomenal returns in the long run. It's the stories like the guy making, turning 800 or $60,000 into 300 million that make people start, they start salivating and go, oh, I want to do that. I should have bought. I'm going to go buy calls on Nvidia. Well, it's a $3.5 trillion company because somebody said it's going to go to 10 trillion.
It
So
probably
I'm going
is
to go
going
buy
to go
call
to 10.
options right now.
We were talking about books before. One of the things Josh Brown was talking about is Nvidia. It's worth $800 billion. Like, that's worth 3 trillion now. Like,
Yeah.
when he was saying it's worth 800 billion, like that was too much. It's almost worth more than Apple. Like, we were talking about books before. I don't know. Should we talk about that now or later? We'll throw. We want to do books at the end?
Let's do books at the end. We've got a couple fun books we're both reading right now, so
Yeah.
we'll do that at the end. But yeah, let's talk markets for a little bit, and then we'll.
So Tesla, today's the 10-10, and I have several trades going on in Tesla. I'm long stock. I have something like a bull put, and right before the close, I did buy a few long calls that expire next week, short-term long calls. Maybe I was inspired by this Canadian guy. No, the fact is that the analysts work that I was looking at, and these are calculated bets. I'm not taking a significant portion of position sizing is very important here. Literally only two calls. So it's a $1,500 bet, if you will, that Tesla's going to go higher. And we've got, an event next week as well. So there are catalysts there, and we'll see what happens with Robotaxi. I happen to be bullish on the event. Normally, I'm bearish on Tesla events. I normally am doing a bearish trade because it's usually a buy the rumor, sell the news. But since this event was pushed off, I do think that we're going to see some really some things that are going to blow some people's minds coming out of Tesla. We'll see what happens. I mean, we'll all know tomorrow whether I made a decision. Actually, this by the time you're watching this video, you'll know whether or not that was a good idea. But I did share it with our community at Trader Oasis that I did the trade. So
You want to know a crazy stock right now, as far as pricing goes? So November 15th options, right? About a month out. The stock is $24. Stock's $24. The November $25 call is trading at $7.
it's got like 300% implied volatility. What is it?
The put is trading at $7.50. You want to do an at the money strangle or an at the money straddle, you're going to spend $15 on a $24 stock.
Who is it?
It's the Trump Media Group. DJT.
Oh, yeah. So I guess that's because of the election, huh?
Yeah.
So,
That's what's crazy. That people, what made me think about that's the bet you showed me that some guy, I think you retweeted it on Twitter earlier today.
oh, there it is. Yeah. So the November 8th, that's the day after or the week after the election, right? November 2nd is the election. So, is that, yeah, that's right.
Sorry, I was looking at the November 15s.
Oh, well.
So is the pricing I was looking at. The November 8th one, I guess, would still encompass the election.
Yeah, there's 262% implied volatility. So it'd be 1475 to buy a straddle on that thing. Wow. Yeah, straddle. So.
You can do an in the money covered call, like $10 in the money, and actually still make money, like 50% in the money.
Well, that stock's gonna move. It's gonna move $14
I was
after the
gonna say
election.
it could go to $2 if he doesn't win, right?
Yeah, well, one of the things that I've been looking at is the implied volatility of the market. People are talking about the VIX, and if you take a look at the VIX futures, so this green line is the VIX, the October VIX, which incorporates the election. If you look at the how is the VIX calculated? Part of the reason, this is what people don't understand, is the VIX going up this week. People are, hey, we saw a big jump in the VIX on Monday. And that's because the VIX is actually a calculation based on SPX options. And I don't know if I know you understand this, but just so people understand, what they do is they go and they look for options that expire in 30 days. And so right now, the November 8th and the November 11th, those options, we're using the implied volatility, which our implied volatility method at Trader Oasis is a little bit different, but different than the VIX calculation, but they go up and down together. But if you look at November 5th, November 6th, so you got 13, 13, and then you got 6 is 15th, the 7th is 16, 16, 16. So what happened on Monday is we were using these two options. So 4 days ago, we were using these two options to calculate the VIX, which have a very low implied volatility. And then over the weekend, we roll to these two options, which already have elevated volatility. So the volatility for these options out here are pricing in the election, so that the VIX didn't. Yes, the VIX went up, but implied volatility didn't go up that much. So it's a little bit of a it's a little bit misleading to look at that. But certainly the election is pricing in some serious impacts. And I am so thankful that we're within 30 days now of this election because I'm
Me too.
so sick of it. I can't wait till it's behind us.
Yeah, I'm ready for it to be over. So let's
So who's
talk a
going to
little bit.
win? Speaking of bets, did we?
Well, that's what made me think about the Donald J. Trump media is that bet that you actually shared on Twitter of was it Twitter or Facebook? I don't remember where you shared, maybe both.
I think I shared it on Twitter.
About
Um,
somebody placing a bet on a very large bet
a
on
very significant
on
vet.
President Trump winning the election.
Yeah. So some guy, and you can actually go see who this person is. Um, you can figure out his profile. He's placed a whole bunch, and this is his biggest bet, but he's got another couple $1 million in bets that are on state races and who's going to win different states. But he's got a $3.8 million bet on Trump and Harry Crane.
Harry
Uh,
Crane has the best line of any of them yet.
Yeah, this one. Harry Crane says, yeah, but he's gonna be taxed on 315,000 on unrealized gains. That is because there's one candidate who wants to make you pay taxes on unrealized profits. Just ridiculous. I don't. Yeah. Anyways.
So yeah, I'm ready for the election to be over too. Traditionally, this is a pretty bullish time of year. Um, I think the only thing that could derail this, fourth quarter rally is if we do have some type of um, uncertainty around the election. If we have such a tight election that we end up, I mean, let's be honest. Last year's election was contested. I mean, there was obviously
Last
the
three or
last
four
year,
years ago.
4 years ago, the last presidential election was contested. But could you imagine if we have an election that's as close as the Bush-Gore election of 2000? I don't know if you
Hanging
remember
Chads. Oh
the
yeah.
hanging chads,
Yeah.
and that actually caused angst in the stock market for quite some time
Yeah.
until we got resolution to that. And if we're that close, it's going to cause some. I still think the most interesting scenario, and I keep playing it out. I know you've done this before on the 270 to win website.
Oh yeah.
I think it's very easy to see a 269 to 269 outcome of electoral votes and actually see the election be a tie that is decided by the decided by the House congressional leader as to who the Speaker of the House, as to who the next president would be. So I guess it would be a vote of the House, but the Speaker is ultimately the one who's going to control that, right?
And then the Senate picks the vice president, so we could have a
Yeah.
Trump president and Kamala vice president. There would be harmony across all the colors if that happened.
Yeah, that would be. Let's hope not. Let's hope we get some more resolution than that. I again because from a market standpoint, things are doing okay right now. This is historically speaking a very bullish time. We get to the middle of October. This is usually when the market starts to bottom out. You start to look for the rally going into the end of the year. Usually the month of November is actually the really bullish month um, for both the Nasdaq and the S&P 500. You can see those numbers. You get some the average return for the month of November is 2.2%, which is the best performing month of the year outside of July. July is the only one that outperforms it with a 2.8% gain in July.
That's Nasdaq, and then here's
The
and
S&P.
the S&P 500. So we're right here right now. This is the S. This is from Equity Clock, and they have seasonality charts. So this is over the past 20 years, and to see where we are. So normally September, the second half of September, and this is what I was looking for. We didn't get this pullback at all. September stayed strong, which is great. But we tend to get things accelerating, and this is even true even during election years. So
Yeah.
election years, we tend to get if we've had a strong first and second quarter, Fourth quarter tends to be very strong as well.
I think our chaos in the election will actually come, like in the markets. If it causes chaos, it will come in the month of December. If we get to a non-resolution type, if we go through an election in November and we get clear into December and we still don't know who the president is, then I think the markets will start to worry about it.
If there are pullback, I think there's going to be buying opportunities. Like I was telling,
I do too.
yeah,
I do
because
too.
that's all going to be temporary. And the truth is that
Yep.
the market is going to do fine under either candidate. There will be some portfolio rebalancing. There are certain sectors, and I think we shared this on the last episode. If we didn't, maybe that data is out there. Let me know it because I can get it to you. That there's certain sectors that are going to do very well when under one president versus the other, and there's just differences in policies. So you don't have to be a rocket scientist. And I think it's hubris to say that the elections don't matter to markets. They most certainly do. It has a huge impact on sentiment and it affects businesses. I've personally worked for a company and we said, hey, we're going to hold off on making a decision until after the election. And then after the election, they made a decision which wasn't great. So we decided to shut down manufacturing in Southern California and relocated it to the Czech Republic. So that's, I mean, business that, and and it was actually a British owned company. They came right out and said it because of the new president, new policies. This is what we're doing. So 2009, we moved everybody. We fired all the people in California and hired a couple hundred people in the Czech Republic and literally moved the equipment from San Diego, Southern California, all the way out to Rancho Santa Margarita was the town actually. So it does have real impacts, and to say that it doesn't is, but so there. But overall, I think the thing that market hates is uncertainty, and if there's anything we do have, and that is certainty on the policies. So I don't think we're going to see the market pull back. I think, and there's lots of liquidity reasons why. I think we're going to be good for at least another year. So I think now is the time to still stay bullish.
Yeah, I'm gonna have to agree with the liquidity is really the issue to watch. And I hope we have a year left of it. I'm, leaning more towards the end of next summer, is where we might start to run into liquidity. But a lot of that could change too, depending on what the Fed's next steps are. And, if we see a resurgence of inflation, and it's too early to tell. I know we had our CPI data came out today. The headline, of course, says lowest CPI reading since 2021, which is true on the headline number, but the course actually is showing that inflation isn't conquered yet, that most of that inflationary loss that we've seen, or slowdown maybe is the better way to say it. We haven't seen deflation yet. We're just seeing a slowing down of inflation, is still mostly centered around gasoline prices that we know are very volatile and could change very quickly.
So you're talking about CPI?
Yeah, yeah, no, that's what I was going to say. I think the the amount of liquidity, I think, can be dependent next year on what the Fed ends up doing next. If they continue their path of cutting rates, I actually think that could cause potential more harm. I don't know if you saw, I think it was Bostic that came out today that said he's made a case for pausing. Yeah, it was Bostic made that actually they should pause in November rather than cut again. Which tells me that, and as you read the minutes this week from the FOMC, was that last week? No, it was this week.
It was this week. It was yesterday. I guess
It was yesterday.
Long day, Greg.
It was yesterday. Was a long day.
Does it feel like a week already? One day sometimes.
It was yesterday. The FOMC was split.
Yeah.
As you see on their decisions to raise 50 basis points. Or excuse me,
I would have been on the other
50
side of
basis
Michelle Bowman. She was the abstention, right? She dissented and went with 25 basis points. I would have been on a hold. That's me. And the reason is if you look at this chart here, in Greek, I'm sorry, not in Greek, but in options, we talk about Greeks, we talk about delta gamma. Gamma is the change in delta. And basically what it is the convexity of the curve, the curviness of a line. And does it curve like a smile or does it curve like a frown? That's convexity. And if you zoom in on this chart, I see something that's, I mean, this isn't an opportunity to freak out, but that is convexity. And what's the trajectory here? I mean, is this just noise? Is it going to continue down? So we've got two lines here. The light blue line is the overall CPI, and it's 2.4. So hey, we're heading in the right direction. It keeps coming down. It's a little lower than last month. Last month was 2.5. This is 2.4. But the Fed looks at core, and the reason they look at core is because there are super volatile components of the headline CPI, namely food and energy. And those are very significant. They do impact inflation. But if you look at these two lines, one jiggles a lot more than the other one. So if you want to get a kind of an idea of where overall inflation, and it's the headline inflation that really matters, which way is it going? We look at core. So it's not that headline isn't important, but we got a tale of two stories here that are different. And I think if people who just peel the onion a little bit and go a little bit deeper, it's very concerning that I think you can make a case that we've got an inflation problem. And Michelle Bowman is the one who says, I'm not convinced we got inflation under control. I'm okay. I think she would have, in a vacuum, if she didn't know what the pressure was, she would have said, don't do anything, keep policy the same. But she
Yeah.
fought for a quarter. I think if she said 0 and everybody else was 50, it would have been and her abstain or her dissenting is a big deal. It hasn't happened in like 30 years. And this is governors. So Fed governors, they should work it out. So it's kind of a big deal. Everybody's downplaying it, but it is a big deal. I like to take and dive into the CPI numbers. And so this is the report that I downloaded today. And if we look at what went up and what went down, so the orange lines are the changes. And so watches went up and food at secondary schools and furniture and bedding and transportation. Well, transportation is kind of a big deal. Those things went up. But if you go, what went down? Fuel oil and gasoline went down dramatically. This is sorted by percent change. This is sorted by importance. So the most important stuff is up at the top. And I like the squint test. I would encourage people to look at this chart. And if you're looking at it and just which way are the orange lines going? Are they more to the right or more to the left?
Yeah,
Now, what?
I was gonna say for sure more to the right.
And if it wasn't for this one number, which is gasoline, this is month over month down 4.1% month over month. That's huge. This is an insane big difference. Now, these things going up, all items went up 2.22. So multiply times 12, that's where we get the 2.4. So rent or shelter, 2.4 is okay. We'd love to see it a little bit lower than 2. But these other things are going up. And as you pointed out, these numbers are through September. So what was going on in September? What let's talk about crude oil.
Yeah, we were bottomed at crude in September. We hit $65 a barrel in September. And since then, we've come back up a full $10. I mean, I think today we finished, I was just looking at crude futures, commodities, crude finished at 75.59 today.
This is yesterday's price. So
Yeah.
this bar chart does a nice job on these charts, but they're a day behind.
Yeah, it was up $2.35 a barrel today, up 3% today at 75.59. So crude is clearly back on the climb again, which means
So what happens if you go back to this chart and instead of this, you have it being 4% in the other direction? If you do that, our headline number, if we go back to here, this headline number is soaring higher.
yep.
And that's what's
Yeah.
going to happen next month. I mean, unless crude crashes here in the next few months.
I think you and I are both on the
A few
same
weeks.
page right here that we believe the double hump of inflation is coming. In the next 6 to 12 months, we're going to see inflation climb again. I hope they don't let it do what it did in the 70s and that we see it go into double digits of inflation. Hopefully they will stave it off before then. But, you look at both presidencies, both parties right now, I should say, they're not, neither one of them are presidencies, even though one is in a current presidency as the vice president and the other one is a former president. But both of them in their talking points, in their their campaign speeches right now are pitching different platforms, different economic agendas that are going to be inflationary. They're going to be in different parts
For sure.
of the economy. But
I'm
on
just
one
thinking
hand, you
about rent to
have
shelters. We're going to help people out by giving first-time home buyers. We're going to give them all $25,000. What do you think just happened to the price of houses?
yeah,
What do you think happened when they started giving rent control in New York City and they started giving free money to people? The price of rent went up. I like, and that's, oh no, people are gouging. They won't do that. Well, unfortunately, this isn't when it's a state-run economy, by the way, communism, then you can control prices. We're not quite there yet. So we're still a free market. And if you start giving money away, that's the big part of the reason why we have this inflation. And I'm not saying they did the wrong thing, but because of all the money, the stimmy checks, and everything that came out during COVID, God bless the Fed because they did a great job threading the needle, and Treasury and the administration too. I give them credit. We kept you and I was afraid we were going to have another 1933 sort of crash, and it certainly looked that way. And we've been able to pull through this. And for me, I was thinking about it today when I was kind of just driving my car back from being out here for lunch. About when did it happen that you realize your parents don't know everything? And the Fed doesn't know everything, right? We look at the Fed and think like, oh, they're omnipotent. And I had somebody recently saying, well, they get all this data that we don't get. I said, well, hold on a second. They don't have any data that you and I don't have. We have all the data they have. They don't have any extra data. This is it. This is CPI it's all public. The only thing that they have might be a little bit of a lead time. And I mean in the matter of hours or a day or two. And they have tens of thousands of PhD economists or thousands of PhD economists working for them who can crunch the data and run models. That's what you and I don't have, but they have access to the same data and they're just trying to do the best they can. And they're just human beings and they make mistakes. Don't be surprised. I was thinking the same thing. Like do you remember, Greg, when you realized your parents, like at some point in your life, they know everything?
so for me, here's
Yeah.
the answer to your question. Rooftop bar, Miami.
What's that?
The day that I realized that the Federal Reserve does not know everything.
Oh,
Right. My parents don't know everything.
right.
I say parents, right? Our analogy here. Rooftop bar. Was it Miami or Fort Lauderdale? Where were we?
Oh, yeah. Yes.
Maybe,
Rooftop
maybe
bar.
it
Oh,
was.
we were in Sarasota.
Was it Sarasota? It was it
Yeah.
Sarasota?
With the
Sarasota.
voting
Rooftop
member of
bar,
the Federal
Sarasota.
Reserve, a governor. It's like, he's a human being. He's
Yeah.
just like you and me. He's just like us. He's a regular guy. And he's asking us, what do you guys think?
Yeah.
Like he wants to hear, which it was an epiphany for me. And he made it pretty clear. We're just we got the same information you get. We're just trying to do the best we can.
And,
I'm
I
not,
agree with you, Eric. They've done a phenomenal job
yeah,
in the
yeah.
last 2 years navigating the many different storms they're navigating. And the biggest storm they're still navigating is what you had brought up before. Why you have to stay bullish in the market right now is the massive amount of capital that got dumped into the system from the federal government in response to COVID. And it's what caused inflation to begin with. It
Mhm,
wasn't the Fed.
mhm.
And it's going to be what's going to cause inflation to spike back up again is if liquidity starts chasing assets again.
Yeah.
Um,
That money has to go someplace.
yeah,
How do we get to $3 trillion companies when they were 800 billion, which was like, wow, 800 billion.
yeah,
Uh, and now we're like 800 billion, only 800 billion. That's how you
right.
get $3 trillion companies. That money has to go somewhere, folks.
All right. What are you reading?
Oh, so we were talking about books.
Let's wrap it up. We've been going. People are probably already lost us, but we love this stuff anyway. We're just talking to each other anyway.
So
So
I am reading right now. I'm in the midst of Josh Brown's You Weren't Supposed to See That. Now, I love Josh. He's the CEO or Chief Investment Officer of Ritholtz. Um, he's on CNBC. You see him all the time. He used to have a blog. He ended the blog. And well, a little inside baseball here. Barry, Barry doesn't play poker, but he sits at the poker table all the time. So I fish with Barry. I see Barry Ritholtz, um, I don't know, once a year or so, and getaway in Maine. And he was talking about writing a book. And Morgan Housel told him, "Hey, let's like you got so much content out there. You don't have to write new stuff. Just take what you got." And the truth is, uh, this is Josh's blogs, but it's the best of Josh's blogs, and he's got updated with commentary. And when I listen to it, I'm like, I've read this, or some of the blogs I haven't read. It's worth it to me. If you like Josh's input, I think it's just worth reading. I recommend everybody. Well, Greg, especially if you're a money manager, if you're but I'm tell you what, it's probably going to piss you off. And he starts off the book by saying, "I'm going to tick off a lot of people by reading this book," and he did irritate me a little bit in some of the stuff he said, because to a little bit of the extent, Josh, you're part of the problem. Like that's like the solutions are there too. But I hand it to him because he says the stuff that a lot of people don't say, and you're like, you're not supposed to say that in public, like Josh. And so he says some of that, and I'm not talking about f-bombs or anything, and there's some of that in there, but he does have a good perspective, and I have a lot of respect for him. He's one of the few people on CNBC that I know is smart and credible and has integrity. Not that there aren't other people. You got to be careful with some of the people on CNBC, but this is a good one. I'm reading this one.
So I go through rotations of books where I like bounce the subject. I'm actually reading a fiction book right now. I just finished I don't even know what to call it, a documentary book. It was Annie Jacobsen, great author, by the way. Annie Jacobsen's latest book called Nuclear War. And it was a intriguing book, a scary as hell book, to be honest, about the reality of our government's policies. But a very enlightening book too. I mean, it was yeah, there it is right there, Annie Jacobsen. And it's yeah, very well written, very well written. And as you
Sounds
can
like an
see,
uplifting spiritual. Is this a self-help book or something?
I don't know definitely, I don't think there's anything I wouldn't say anything about that. That's one of those that exists. It's real. I'm just gonna live with it, and maybe ignore it. But anyway, I just finished that book, and so I had to clear my head. I went to a fiction book, which has actually been a great one, by the way. If you've ever read Andy Weir, some of you
Andy
probably
Weir,
watched The
The Martian.
Martian. The book that I'm reading right now, I'm in the middle of it, about towards the end of it, it's called Artemis. Again, fictional book. Yeah, Andy Weir.
The Martian, you probably know that's with Matt Damon.
Yep. Yeah, that's one of Matt Damon's. Yeah. So
Yeah,
there's the one I'm reading right now. It's the
so your Artemis. So I'll check it
Artemis
out.
one.
Yeah, The
So
Martian was outstanding. So.
as soon as I finish Artemis, then I'll actually move back to an economics finance book. So maybe I'll pick up Josh Brown's book next. Sounds good.
You need to read. You got to listen to that, John. If
I
you
will.
listen to an audiobook, it's really easy, and he reads. Anyways, my electric doorbell's going off, so I think there's
Okay.
an Amazon package at the door. My Amazon Fresh delivery, maybe, or something.
There
Coming.
you go. Go make dinner.
All right.
Okay.
Good
Thanks,
talking to you.
friend.
All right.
Yep.
See you
See you at the
later.
next one.
Bye.